Hey everyone, welcome back to Corporate Decoder. Today we're diving into ASE Technology Holdings Form 20F, their annual report filed with the SEC. It's like their yearly exam, and some of the risks they highlight, let's just say they could make your investments feel a bit shaky. Get ready for a deep dive told in plain English into the world of semiconductor giants. The report is at its heart letting investors know what's up with the company. We will talk about the financial form, its challenges, and its opportunities. ASE Technology Holding is a massive player in the semiconductor industry. They do the packaging and testing that makes those chips in your phone and computer actually work. So let's crack open this filing and see what's going on, shall we? First, the basics. This report covers the fiscal year that ended on December 31, 2024. This is very important for investors because it shows how the company performed over the last year. Now, onto some important house cleaning. It seems ASE sold off some subsidiaries in China back in 2021. These included ASE, ASEN, and ASE. This move suggests they might be streamlining their operations, focusing on core strengths. Let's move on to one of the most closely watched numbers, outstanding shares. As of December 31, 2024, ASE Tech had 4,414,937 common shares floating around. But that number has already changed a bit since the year ended thanks to employee stock options. That means there could be more shares out there in the future. This impacts share prices since it dilutes stock. Next up, big news for those of you who like reports being accurate. The auditor has attested to management's assessment of its internal control over financial reporting, saying yes. It means they have checked and confirmed they believe that the internal bookkeeping and financial reporting is all in good order. It's also worth noting that ASE prepares its financial statements using International Financial Reporting Standards, or IFRS, as issued by the International Accounting Standards Board. That's the global standard, not the US GAAP. Keep that in mind when comparing them to American companies. Alright, legal jargon aside, let's dive into the real meat of the report, the risks. This is where the company tells you what could go wrong, and in the semiconductor industry, there's plenty that could go wrong. Right at the top is the cyclical nature of the semiconductor and electronics industries. Demand goes up and down like a roller coaster. This could affect their revenue and net income. If conditions in the markets for communications, computing, and consumer electronics take a hit, so will ASE. Competition is fierce. The company faces competition from other independent packaging and testing companies, as well as those big integrated device manufacturers who are doing their own thing and gaining those customer bases. To compete, they need to stay ahead with technology, total solutions, and responsiveness, which all costs money. A big risk unique to them is political instability between Taiwan and China. The strained relationship between the ROC and the Petronas political events could negatively affect our business and the market value of our common shares and IDSEs. Past tensions have depressed the prices of Taiwanese company securities, and any future flare-ups could do the same to RCS. And there's also the unavoidable issue of natural disasters. Taiwan is prone to earthquakes and typhoons, which could disrupt business. With a substantial portion of our business and operations are located in Taiwan, we are vulnerable to natural disasters, including earthquakes, typhoons, droughts, as well as power outages and other industrial incidents, which could severely disrupt the normal operation of our business and adversely affect our results of operations. The semiconductor and electronics industries are particularly vulnerable to disruptions caused by earthquakes. The loss of a large customer is another major risk. 5 largest customers accounted for approximately 48.4% of our operating revenues in 2024. So losing one or more of those could hurt. Also, there could be an impact of government policies on competition, and price pressure of our customers may negatively impact our business. Inability to obtain adequate supplies of raw materials and energy in a timely manner and at a reasonable price could affect their revenues and profitability. Raw materials such as IC substrates are prone to supply shortages since such materials are produced by a limited number of suppliers. Rising global energy prices also pose a challenge. Plus, if they are unable to manage their expansion or investments effectively, their growth prospects may be limited and future profitability could be adversely affected. But now some of the principal risks associated with legal issues are: 1. Any environmental claims or failure to comply with any present or future environmental laws and regulations, as well as any fire or other industrial accident, may require us to spend additional funds and may material adverse impact on our business operations and prospects and cause fluctuations. These cyber attacks could harm our business, financial condition, and results of operations. 2. Cyber attacks could harm our business, financial condition, and results of operations. 3. A security breach or failure could expose us and our customers, dealers, and suppliers to risks such as unauthorized access to information technology systems, misuse and compromise of confidential information, and manipulation and destruction of data. The negative publicity in connection with the legal proceedings may adversely affect our brand and reputation, which might result in a material adverse impact on our business operations and prospects, and cause fluctuations in the trading price of our common shares and IDS. There is also the risk around political impacts. To address customer concerns regarding potential operational impacts in Taiwan stemming from regional political risks, we build flexible and resilient supply chains to address shifts in market conditions and to satisfy customer needs, broadening our markets through expansion of overseas operations, joint ventures, acquisitions, and other strategic investments. However, there is no assurance that any of these expansions would be as effective as expected. Climate change and environmental concerns could negatively affect our business and financial planning. Rising global energy prices pose a significant challenge to our operations. Since our business operations depend on adequate supplies of water, an extended drought may affect our ability to obtain sufficient water and threaten our production capability. Natural disasters including earthquakes, typhoons, droughts, as well as power outages and other industrial incidents which could severely disrupt the normal operation of our business and adversely affect our results of operations. While we have not experienced any structural damage to our facilities or damage to our machinery and equipment due to earthquakes, we have experienced interruptions to our production schedule in the past, primarily as a result of power outages caused by earthquakes. Now, let's flip the page to what everyone really wants to know, the financials, and you'll recall that these financial statements are made using IFRS accounting standards, which is one thing to watch out for. You can see the difference yourself in Exhibit 101. First, let's talk about the money coming in. In 2024, they made NT 595 or 4 billion in operating revenues. That's about US 18 billion compared to 15.8% in 2023. So revenues increased a little with a bit of a better gross profit. One thing that could affect their income are impairment charges. These are write-downs when assets lose value, and ASE recognized impairment charges of NT 102,046 million are expected results of operations over several years in the future. Operating expenses also ate into things. For example, selling and marketing expenses increased over 13%. As a global company, ASE is exposed to currency risk. Fluctuations in exchange rates could adversely affect our business, results of operations, or financial condition. Within our global operations, significant transactions and balances are denominated in currencies other than the NT dollar. A significant portion of our revenues are denominated in NT dollars and Japanese yen. I also want to make sure we highlight power. The supply of electrical power in Taiwan, which is primarily provided by Taiwan Power Company, is susceptible to power disruptions that could be prolonged and frequent, caused by overload as a result of high demand or other reasons. Such power disruptions could further be exacerbated as the government of Taiwan is committed to phasing out nuclear power in Taiwan by 2025. Lastly, let's discuss a lingering cloud. There's an ongoing legal proceeding involving Dr. Tien Wu, a director and their chief operating officer. Dr. Wu was found guilty on certain charges of insider trading involving SP shares, back when ASE was trying to acquire Spill. While Dr. Wu has appealed, this could definitely cause headaches for the company and decline the stock price. Now let's talk about something that's been talked about a lot, at least in the financial world, and that's goodwill. We monitor this for financial reporting purposes, but not necessarily for our internal management. Determining whether goodwill is impaired requires an estimation of the value and use of the cash generating units and use a suitable discount rate in order to calculate the present value. ASE's strategy is to provide total semiconductor manufacturing solutions. They intend to keep building closer relationships with customers and providers of complementary services like Taiwan Semiconductor Manufacturing Company, or TSMC. In expanding their manufacturing capabilities, focus on trends essential to the development of the industry. To address related risks, we have established a wastewater reclamation recycling system and implemented 3 water use strategies, including reduce, reuse, and recycle, to prevent water shortages. These actions will enable us to respond effectively to climate change debt, to address customer concerns regarding potential operational impacts in Taiwan. Stemming from regional political risks, we conduct evaluations and planning for possible overseas plant expansions. So what's the takeaway here? ASE Technology Holding is a major player in a critical industry, but faces serious headwinds. These range from forces outside of their control, like trade wars and environmental issues, and things that they have to keep on top of, like supply prices and competition. The legal issues surrounding Dr. Tien Wu also adds a degree of uncertainty to everything. There are no assurances that we will be able to find suitable replacement directors or executive officers. That said, as of this report, ASE Tech's results look pretty solid. Just don't forget to keep an eye on those risk factors before you make any investment decisions and understand what is happening there, especially now that it's a holding company structure. Again, thanks for watching. If you enjoyed this video, please subscribe, like, and comment.